My name is Dierdra Pressley, and I'm going to pick up where Tracy left off, talking about the 5 C's of credit, the things you need to know as a new developer or intermediate developer going to look for financing from lending institutions, whether it be a CDFI or a traditional bank or hard money lender, whatever it might be, things that you need to know as you're moving your project forward. The first thing I wanted to kind of go into were the 5 C's of credit. The 5 C's of credit are what banks and other lenders use to evaluate a potential borrower, and while making it in their process of making lending decisions. The 5 C's are character, capacity, collateral, capital, and conditions. So what we're going to do is briefly review those here to give you some idea of what they are looking for. The first thing of character is one of the most comprehensive ones, and what they're looking for in this part of the evaluation is credit worthiness, who you are, what your credit says about you. It basically says who your character is as a borrower, where you be the person who would pay back the funds if they were to lend it, what your track record is, and how you make your repayments of funding or financing. So that's your character in this case. The next thing they look at basically your capacity, and what that is what your capacity is to repay the loan if necessary. There are a number of opportunities in the development process which can go a number of ways. Is if your project goes a little bit longer than anticipated, or something arises in the process where there are other funds that are necessary, and time goes beyond what you're expecting. They want to know that you have the capacity to repay the financing that's in place, that they've lent you to do your project. And the next thing is capital. This represents your overall pool of assets in the name um, of the borrower. And a lot of it is really focused on the property in the sense of lending for real estate, the property that you're looking to purchase, renovate, if you were looking to sell that property, or if you're looking to hold it in a rental portfolio. So that would be acting as your collateral or capital in this instance. What it looks like. So your capital looks, shows who you are, what you have available to make those payments. It shows what your capacity is to do, make the repayments, I'm sorry, for the loan that you're looking to obtain. Additionally, they provide conditions. Conditions of the loan could be a number of things, but looking at, say, what your credit is, if there are any issues with the property. So conditions can come in a number of forms, making sure that you have the capacity financially, and the capacity as far as development wise to handle and to oversee those conditions, to make sure that you correct those conditions prior to moving forward or during the process of the project. Any requirements that they might put on you for the financing. Um, and the 6 C in this instance, we always say there's 5 C's are standard, what we just mentioned, but the 6 C is what we look at a lot of as a community lender. What impact your project will have on the community, and how the community feels about your project or how the development project you're proposing. So what we're looking for you as a developer is being able to have conversation with the community. There are a number of community organizations in Baltimore City. I think there's somewhere around 220 or so. So any neighborhood that you'll be working in would definitely have a community organization, a community CDC of some manner in which you would be able to reach out to and have conversation with regarding your project, because you want to make sure that community is on board with what it is that you want to do with your development. We don't want a developer or investor to go into a neighborhood and to start spending money on a property and looking forward to doing a project and get part ready to move forward with their plan, and then the community puts a stop to it. It could be a part of a zoning issue. Say if you were looking to renovate a property and put 3 apartments in that unit, but then the community has other plans for their neighborhood. They're looking for more housing for families and more single family housing, home ownership. So we definitely look for borrowers to maintain at least an initial relationship or reach out to community to make sure they have their input, because as many times that a community could make or break your proposed project. So definitely take that into consideration when you look at the 5 C's, when you're thinking about your character, your capacity, the collateral, the conditions, and the capital that's necessary to move a project. Please think about your community aspect of it, making sure you have that contact with the community, and making sure your project aligns with what the community sees for itself.